Hold on tight for 30 seconds. Something massive just happened behind the scenes involving Elon Musk's artificial intelligence system, and it could completely rewrite the trajectory of XRP. I'm talking about Grok, Elon's AI brainchild running inside X, the same one designed to absorb live financial data, macro trends, blockchain transactions, and global sentiment in real time. For weeks, it's been quietly scanning market correlations between the Federal Reserve, liquidity flows, and digital asset pricing. And just 48 hours ago, it dropped a projection that stunned even seasoned analysts. It flagged XRP as the highest probability outperformer heading into the next monetary easing cycle. No meme coins, no hype tokens. XRP. That's when I knew we had to talk about this. Before I go deeper, let me make this clear. None of what you're about to hear is financial advice. I'm not a financial advisor, and this channel exists purely to educate, inform, and help you think critically about what's unfolding. Always do your own research, never invest what you can't afford to lose, and use this information as a framework, not a signal. That said, if you value early insight, the kind that mainstream media only confirms months later, hit that like button, subscribe, and turn on notifications right now. Because what's coming could change the way you look at this entire market. Let's set the scene. As of today, XRP trades around $1.25. On the surface, it looks boring, almost lifeless, while Bitcoin, Ethereum, and other tokens dance around their own cycles. But Grok's analysis didn't look at daily noise. It looked at systemic liquidity shifts. It cross-referenced historical data from 19 easing cycles since the 1980s and mapped them against altcoin behavior during each liquidity surge. Then it added sentiment data, social media velocity, institutional filings, even ETF inflows, and produced a probability index. The result? XRP ranked number one in potential percentage gain over the next 18 months, eclipsing even Bitcoin and Ethereum. That's what raised eyebrows across X's financial research community. Why XRP? Grok's algorithm flagged 5 converging variables: the Federal Reserve's rate cut trajectory, ETF inflow acceleration, supply concentration among institutional wallets, pending custody integrations with banks, and behavioral mistiming among retail investors. Put simply, it saw a perfect storm forming, the same pattern that historically precedes exponential price revaluations. The data shows that within roughly 3 months of the first rate cut, liquidity floods into risk assets. We saw it in 2020. We saw it in 2017. Every single time, altcoins with real utility have led those surges. And here's the wild part. Grok didn't just stop at macro forecasting. It analyzed Ripple's corporate actions, acquisitions, partnerships, treasury integrations, and ranked them by potential impact on global settlement flows. It noted Ripple's purchase of G-Treasury, the billion-dollar liquidity management platform used by Fortune 500 firms. That deal didn't trend on crypto Twitter, but for Grok's model, it was the trigger variable. Why? Because G-Treasury is embedded inside the daily cash management systems of multinational companies that move billions across borders. Integrating XRP's rails there means the token isn't just speculative anymore. It becomes functional infrastructure. Grok's forecast calls this transition the utility phase breakout. When infrastructure adoption crosses a certain threshold, market repricing follows, fast and violent. The AI's chart projection looked almost unbelievable. A parabolic curve starting mild through Q3, steepening into Q4 2025, and peaking between $5 and $12 depending on liquidity velocity. But here's what most people missed. Grok doesn't predict in straight lines. It models human behavior, panic selling, FOMO entries, and emotional cycles. It simulated how 80% of traders would react at each price milestone and then extrapolated the correction points. According to that, most holders will still sell too early, around $4 to $6. That's where the majority of retail exits occur before the institutional wave even starts. Sound familiar? That's the same mistake we saw in 2017 when XRP blasted from 10 cents to $3 in weeks. 95% of traders missed the majority of that move because they couldn't separate logic from emotion. Grok predicts the same behavioral trap repeating, just on a larger scale. The AI even assigned it a probability, an 81% chance that the average investor will mistime the 2025-2026 XRP run. It's brutal, but statistically accurate. Now let's zoom out for a second because I want you to understand the magnitude of what's converging here. The Federal Reserve just initiated its first 25 basis point cut, bringing the rate range down to roughly 4%. History tells us that once the Fed begins easing, they don't stop after one or two moves. Markets anticipate another two cuts before year-end, and that's when the liquidity floodgates really open. Every single post-cut cycle since the 90s has triggered an S&P rally, followed by an outsized move in crypto assets. This isn't speculation, it's pattern recognition. So imagine that liquidity wave colliding with institutional ETF inflows and banks opening crypto custody later this year. Add on top of that a supply drain as ETFs lock up 20 to 40% of circulating XRP. That's not a meme narrative, that's economics 101. Rising demand, falling supply, price repricing. Grok's forecast quantified it. If ETF inflows hit even the lower estimate of $4 billion, that's enough to absorb nearly 1/3 of daily exchange liquidity. The AI flagged this as a structural imbalance. In human terms, it's a ticking time bomb. And yet the mainstream market hasn't caught on. Retail interest remains flat, search volume for XRP news is down 40% from last year, and influencers are chasing whatever meme trend pays next week's ad bill. That's why this setup feels eerily similar to pre-bull run silence. The moment of calm before the storm when smart money accumulates quietly, algorithms start flashing signals, and the majority still think nothing's happening. That's precisely when everything is happening, just not publicly. So here's the real question. When this next surge begins, when liquidity floods in, when the charts go vertical, will you already be positioned? Or will you be the one chasing after it once it's obvious? Because if Grok's data is even half right, this setup is already locked in motion. The silence you're seeing isn't weakness, it's accumulation. It's the calm before ignition. This is Matrix Millionaire, and what you're watching isn't hype. It's the hidden alignment of AI, liquidity, and truth. Stay tuned, because in the next part, we're breaking down exactly how Elon's AI connected these dots, and why the banking system's reaction to XRP could confirm everything Grok just predicted. When Elon's AI, Grok, dropped its XRP forecast, most people saw a headline. I saw a blueprint. Because behind that $1,000 prediction was a reasoning engine, one that doesn't rely on human bias, Twitter hype, or influencer speculation. Grok ingests live market telemetry straight from global exchanges, Federal Reserve statements, liquidity provider feeds, and on-chain settlement flows. It's the same type of infrastructure hedge fund AIs pay millions to rent access to. Elon's version runs on the X backbone, and it's detecting an alignment that hasn't appeared since 2017. Rate cut liquidity, ETF acceleration, and XRP network velocity converging into a single parabola event. But here's what most missed. Grok's model didn't just flag macro signals. It tagged micro-liquidity accelerants, and one name kept flashing, MEXC. Now, I know people love to dismiss exchanges as just trading venues, but MEXC has quietly become one of the most aggressive liquidity bridges for XRP. Their volume-to-listing ratio ranks in the top 5 globally, and more importantly, they've already optimized their rails for institutional inflows. Grok's data feed actually used MEXC's order book depth as a proxy to estimate how fast liquidity could expand once ETF flow begins. The AI called it a retail institutional synchronization node. Translation: MEX is where the smart money and early adopters meet before the wave hits the mainstream. That's why I tell my community this. If you're preparing for the next cycle, don't just watch the price. Watch where liquidity is forming. When MEXC's volume spikes ahead of Binance or Kraken, it's the canary in the coal mine. It means the whales have already started positioning. And if Grok's prediction model is right, those moves are precursors, not reactions. Now think about the timing. Rate cuts free up trillions. ETFs absorb supply. Grok predicts 20 to 40% of circulating XRP could get locked out of retail hands within 12 months. If that happens, exchanges like MEXC will become the last open door for retail liquidity before the vault closes. And that's when the chart will go from steady to vertical. Grok's confidence rating on this alignment? 86%. That's absurdly high for an AI system dealing with macro chaos. It's not promising moonshots. It's measuring probabilities based on behavioral cycles, liquidity compression, and institutional wallet movements. It literally calculated the odds that the next XRP surge will mirror Bitcoin's 2020 ETF-driven breakout. And if that happens, the phrase supply shock will take on an entirely new meaning. This isn't just another prediction. It's the moment where data meets inevitability, and it's all being tracked in real time, by Grok, by the banks, and by those already plugged into the matrix. Let me be blunt. What we're seeing right now isn't coincidence. Its design, the Federal Reserve easing cycle, the ETF rollout, the XRP liquidity choke point, the Grok AI alert, they're all converging into one timeline. The algorithms are already front-running what humans haven't processed yet. That's why price looks still, because the next move is being coded before it's shown. When Grok flagged XRP as the primary velocity asset for this liquidity epoch, it wasn't guessing. It calculated the energy trapped in suppressed valuation. And history always shows what happens next. Compression, then detonation. The same silence we're in now was the background noise before Bitcoin ripped from 10,000 to 60,000. The same apathy, the same disbelief, the same tweets saying, nothing's happening. But the ones who understand cycles, who read data instead of headlines, they move now. Because once this next phase begins, you won't have time to decide. You'll be reacting, and reaction is how retail gets left behind. So here's the truth, raw and simple. XRP doesn't need hype. It's about position, liquidity, and timing. Grok's projection is the signal beneath the noise. The market structure is set, the catalysts are confirmed, and the countdown has already started. Stay focused, stay calculated, because when this breakout ignites, it won't feel gradual, it'll feel instant. This is Matrix Millionaire, reminding you, in a world that runs on algorithms and illusions, information is the only real currency. Guard it, use it, and when the moment hits, be the one who is already there.